All right, before we get too far into this video, I do need to preface that this is not financial advice. This is not me telling you what to invest in, or it's not financial advice. This is just some stuff that I've picked up over the years that you guys could maybe apply to what you're doing right now, or apply to your learning actually, because I'm not telling you to invest or buy into anything right now. And I just want to make that crystal clear before we get into this. Without further ado, let's hop into the 8 tips that you need to know before you start trading. So starting off with number 1, this kind of is like a two-parter a little bit, I want to say, but it has to do with the efficient market hypothesis in its semi-strong form. So if you guys just look up EMH semi-strong form, you'll get what I'm talking about. Essentially states that everything that can be priced into a security is already priced into it. So when we take that into account, when we look at derivatives, which is option trading, which I advise against because it's impossible to predict the market. But when we look at option trading, it really says that there's no way to predict which way it's going to go. And you guys might be like, well, I should stop watching the video right now. No, there are other things, but with options specifically, I really advise against trading options unless you actually genuinely know what you're doing, unless you've taken derivatives or applied derivatives or know what derivatives are in the first place. If you don't, educate yourself on that. That's a great thing to know, just to know about in general. But yeah, so avoid options because they can put you in a lot more of a compromised position than you would otherwise be expecting, because oftentimes they are out of the money, which means that you don't actually have to front that money to take on the risk that you are taking on. You can get a lot more leverage than you would otherwise be able to just regularly trading stocks. So please, if you're a beginner, stay away from options. I know they're like, oh my God, this dude made a couple grand off of like, I don't know, 40, 50 bucks. Just learn the market, get in the market. So now that we're past that, now that we're past a little fear mongering, we can get into the more fun stuff. Come up with a list of 5, 10, 15, 20 potential stocks that you would like to trade. Depends on what kind of trading that you're going to do. We can get into that a little bit later, but just create a list, create an idea, watch them from day to day. Before you even start trading, watch them for a week, 2 weeks, 3 weeks. Backtest your strategy using an app like TradingView or Thinkorswim. Both of those are fantastic and I really actually like them. You can do backtesting a little bit easier on TradingView. Both of them offer you paper money accounts, which is fake money. You're not actually investing, but it gives you an idea as like, okay, this is when I would enter this trade. This is when I would exit. This is the percentages that I'm making and stuff like that. So definitely look at either of those. And now once you have those potential stocks, you'll kind of know how they fluctuate, their highs and their lows, their opens, their closes, if they're moving up or down whenever you do decide to get into a trade with them. And now that you have that, set a goal. Set what do you want to do? Do you want to make 1% per trade, which over the course of a year it blows your account up significantly, I would say, if you're doing that every single day. Keep in mind there's tax stuff here as well, which I advise you guys to look into before you get into anything. Set a goal, figure out what percentage, how much do you want to make? What do you want your account to be at by the end of the year? And this will dictate kind of the way that you trade. Are you day trading? Are you getting in and out of trades very quickly? Or are you building your stock portfolio up over the long run, taking wins and long-term gains over short-term smaller gains, essentially? Now, tip number 4 is going to be actually calculating what it takes to get to that goal. 3 and 4, I guess, I kind of go together, but calculate what you need to get to that goal. Again, is it monetary? Is it percentage based? Like, what do you want your account to do? Really take the time to calculate it and hash it out. And this will also help you learn as you go, because you'll be like, oh, how can I gain this percentage? And you may find some guy on YouTube that has a great strategy about that, that can help you learn this stuff. So I would thoroughly suggest doing some real research into how exactly you're gonna get to that goal, or even exceed the goal before you even make your first trade, before you even create your paper trading account. Set it up so you can practice it. And then once you are comfortable with that and know how markets operate and how quickly they can turn and make a great day into a really bad day, I think that's a lesson that everyone should take in, especially when you have a paper trading account. I think it's really easy to just be like, oh my God, I traded for like 2 days and I made X amount of money on this paper trading account. And then you go and get into like the real market, the real world, and you get eaten alive. It's very easy to do that. Take your time, no rush. Stock market's not going anywhere, I promise you that. And then after that, tip number 5 is going to be evaluating risk as you go. Looking at how much risk am I taking on? What percentage of your portfolio are you investing per trade? Stuff like that. I think it's really important to kind of evaluate stuff like this really early on, especially if you are young and it depends how much money you're dealing with. Are you dealing with $100? Are you dealing with $10,000? People are going to look and evaluate things differently based on how much money you have. The same strategy that you use to turn $100 into $200, you may not feel comfortable with turning $10,000 into $20,000 because we're talking significantly more money. And so that's personal risk is something that I think everyone should figure out on their own, especially while you're young, kind of see how much you're willing to risk, and then go from there. Also, use the paper trading accounts it's no money, it's free. It's not real money that you're trading. You are like making money in your paper trading account, and you can just be like, okay, if I had traded there, I would have lost 10 grand. Obviously, like, it just helps accommodate you a little bit better to the highs and lows and the swings of paper trading or of real trading. So tip number 7, actually, because we are counting paper trading as tip number 6, is going to be linear regression. I suggest everyone runs this just to get an idea of what linear regression looks like. It's a line. It's got some R squared values. It's got an X. It's slope, essentially. Well, if you're just doing a singular regressor. But look into linear regression a little bit, because the predictive nature of linear regression, and especially once you get to using multiple regressors, and if you guys look into this, you'll know what I'm talking about, is extremely important and cannot be like overstated. You will not, unless you are a like multi-billion-dollar corporation, and even then they are kind of off sometimes, you will not be able to predict exactly where the market goes, but to a certain degree of certainty, you'll have a general idea if you know what you're doing. And this is very complicated mathematics, but you can do it on Excel fairly simply. So just go and watch some videos about that. Maybe I'll make an Excel video at some point about that. But linear regression is a very powerful tool, and I think everyone should be using it. Now, the 8th tip is going to be looking at just expected returns along with using risk reward ratio. So triple R. Essentially, if you set a stop loss at 10% of your account and you invest $10, then you know you're risking at most $1. But if you only make 50 cents, then you take that 0.5, you divide it by that 1. Your risk reward ratio is only 0.5. Not very good. I think I did the mental math there correctly. But it's not very good regardless. You want to try and take on really advantageous risk reward ratios along with calculating your expected returns and stuff like that. Again, paper accounts are fantastic for this, training you up, getting you used to it and stuff like that. These are just some tips and tricks for beginners. These are like, I think 8, 9, maybe even 10, you could call it. It could have been 7 tips. But I would say these tips for beginners, especially in the market, are essential. Like, just take some time and really learn and dig into it. And if this is something you want to get into, like, get into it, especially if you're not 18 yet. You can't legally trade anyway. So go ahead and learn and read about it, but just look at what you would do in situations. Like, how would you act? Backtesting is another important thing to do. I think it's really fun to do as well, especially if you find a strategy that works. And you can also look at strategies that, oh, why does this work here, but this doesn't work here? And it will teach you about the market and teach you about how modern markets move and how self-correcting markets and free markets especially move, because they are funky things. They do not act as you would think they would act. But most of all, I just want you guys to learn and have fun with it, especially when you're young. You'll have a much better experience if you're having fun with it and not like, oh, I gotta get up and trade today. Like, no, get excited, get up, trade, get up bright and early. I get up at 7:30 on the days that I don't have class to go ahead and trade. So it's like one of those things that I really enjoy it, and I do take advantage of the time that I have to get in and trade in the morning and experience that and stuff like that. And it's a really fun community to be in. So I would just recommend that you take some time to learn about it before you actually go ahead and put money on it. So that is the video. If you guys like this and have any comments or questions down in the comment section, I'm sure I'm gonna have a billion comments about how I said this wrong or did this wrong or whatever. But if you guys have comments or questions, please leave them down in the comment section. I will be sure to answer them as fast as I can. If you guys have any suggestions for more videos like this in the future, then please drop them down below. I will be coming out with some stuff on Patreon very shortly, actually. So that's going to be something that you guys can get into, and I'll be showcasing a little bit of that in one of my next videos. But if you guys like this video and want to see more, be sure to drop a like, subscribe, or comment. Thank you all for watching. I love you all. Have a great rest of your day. Peace.